Disclaimer: I'm not a financial advisor. The content on this channel is for education and entertainment only. Nothing here is financial or investment advice. Always do your own research and talk to a licensed professional before making any investment decisions. Trading involves risk, and past performance doesn't guarantee future results. You're responsible for your own money.
Hey everyone, welcome back to the channel. Today we're diving into Opendoor. If this stock isn't already on your radar, it definitely should be. We're going to break down the latest outlook as of September 5th, 2025, and take a look at what's trending on social media and behind the scenes at Opendoor. Let's jump right in. Opendoor Technologies Incorporated is shaking up the real estate game by making buying and selling homes as easy as shopping online. Based in Tempe, Arizona, this tech-driven company is all about cutting out the headaches of traditional real estate. Think no more endless showings, stressful negotiations, or waiting months to close. Opendoor went public in December 2020 and trades on the NASDAQ under the ticker symbol OPEN. But what really sets them apart? How Opendoor works. They've got two main ways to help homeowners: sell directly to Opendoor and skip the hassle. They'll make you a cash offer on your home so you don't have to deal with repairs, open houses, or timing issues. Want to reach more buyers? Their marketplace connects you with both individual buyers and big investors, all while keeping things simple and digital. No matter which option you choose, Opendoor's platform is designed to make real estate feel fast, fair, and frictionless. So if you've ever wished that selling a house could be as easy as ordering an Uber or shopping on Amazon, Opendoor might just be the future you've been waiting for. Starting with valuation and growth. Opendoor's price-to-sales ratio is incredibly low, just 0.10 compared to the industry average of 4.44. That might sound like a steal, but it's actually a bit of a red flag. Why? Because the company is projecting a 19% drop in revenue next year, while the rest of the real estate sector is expecting about 12% growth. So, growth-wise, Opendoor is definitely struggling. Moving on to profitability and momentum. Opendoor's net income margin sits at negative 7%, which is far below the sector's positive 9%. And the stock? It's taken a serious hit, dropping 67% over the last year. That's a clear sign that investors aren't feeling confident right now. Now let's talk earnings revisions and competition. There haven't been any positive earnings revisions recently. In fact, there have been 7 downward revisions in the last 3 months alone. Opendoor is up against tough competitors like Zillow and Redfin, but it still leans on its technology and scale to try and stay competitive. And here's something interesting in terms of recent developments. Despite all this, the stock actually surged over 100% in just 1 month. But that jump was mostly driven by retail investors and short covering, not by any improvement in the company's fundamentals. Plus, CEO Carrie Wheeler recently stepped down amid pressure to speed up leadership changes, so the company's leadership is definitely in transition. Recently, Opendoor has become a hot topic among investors as the Federal Reserve begins cutting interest rates. Lower borrowing costs would be a major tailwind for the housing market, since reduced mortgage rates typically drive stronger home buying demand, a direct benefit for Opendoor's business model. Investor chatter reflects this optimism. Mentions of Opendoor on social platforms have surged 307%, with communities like Wall Street Bets fueling much of the buzz. Many see the rate cuts as a catalyst that could unlock greater transaction volumes on Opendoor's platform. At the same time, Opendoor continues to lean heavily on AI and advanced data analytics to refine home pricing and improve marketplace efficiency. This technology-driven approach positions the company to capture more value if housing activity rebounds under a lower rate environment. While challenges in the real estate sector remain, the Fed rate cuts, combined with Opendoor's data-first strategy, has strengthened its image as a company well-positioned to benefit from the next phase of the housing cycle. The buzz around Opendoor is strongly positive and super active, mostly thanks to retail investors and meme stock enthusiasm. On September 4th, Opendoor's stock jumped over 16%, with a massive $2.56 billion in trading volume, making it one of the day's top movers. Part of this surge is driven by a new community hub, Opendoor, launched to engage retail investors directly, building transparency and rallying its passionate open army of supporters. Plus, influential figures like hedge fund manager Eric Jackson have been vocal on social media, pushing bullish views and helping stabilize trading liquidity. Platforms like Reddit and X, formerly Twitter, are still buzzing with meme stock hype around Opendoor, fueled by high short interest and attempts at short squeezes. That said, analysts remain cautious. Despite all the hype, Opendoor's slim gross margins, high debt levels, and ongoing challenges in the housing market keep some investors on edge. Still, the company is making strategic moves, like launching that investor community hub and getting public endorsements from board members, to strengthen retail support and build a loyal investor base through social media. Opendoor is definitely facing some big challenges in its core business, but its bold pivot toward tech innovation is catching attention and sparking strong retail interest. Whether this strategy will pay off in the long run depends on how well they can tackle operational issues. If you want to stay updated on Opendoor and other trending stocks, don't forget to hit subscribe and ring that notification bell. And let me know in the comments. Do you think Opendoor's new innovation and business model is sustainable and scalable? I'd love to hear your thoughts. Thanks for watching. Follow our other social medias in the description down below, and I'll see you in the next video.